Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. To expand any kingdom, you must acquire land. And in the realm of real estate, property ownership is often celebrated as the ultimate passive endeavor. The crowd loves to talk about the abundance of cash flow, the appreciation, and the effortless collection of monthly rents. But there's a reality. In the real estate world, fundamentally, it is an active activity, an operational business. And sooner or later, even the best landlord faces the friction of human noncompliance. A tenant stops paying their rent. They breach their lease. They hold your asset hostage. Suddenly, you are forced to step in and take away a level of wealth and effort that only a courtroom can determine. You deploy thousands of dollars of your treasury to retain counsel, pay court fees and filing fees, and to execute an eviction notice. As the cash drains out of your bank account, you look for a shield, a defense. You ask us, we say, hey, can I write off this tax? Can I write this bill off? I'm spending a lot of money. And we give you an answer that sometimes you like, sometimes you don't like. The answer is yes, for the most part, but only if you understand the precise legal classifications of your expenses. So today we're going to untangle the tax code as it surrounds legal fees and eviction costs, exposing what's between the lines in the immediate tax deduction versus a permanent tax asset for you. Under the Internal Revenue Code Section 162 and 212, the IRS allows business owners and income-producing investors to deduct expenses that are both ordinary and necessary to produce income or to maintain an asset. When it comes to a standard tenant eviction, the IRS views these legal battles, these costs, as direct cost of doing business. Therefore, the following expenses qualify for immediate operational deduction on your Schedule E or on your corporate tax returns. You can directly deduct attorney fees, court filing costs, process server fees, locksmith, and remediation costs. All of these are directly deductible. These are not capital improvements. They do not need to be added to the building or the basis of the property. They simply restore the asset to its rightful operating baseline, assuming you wrote off 100% of the cost in the tax year in which it occurred.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
So now let's look at the other side of the coin. If you are paying an attorney to defend, perfect, or quiet the title of your property, the tax treatment is very different. Let's suppose in this example, a neighboring property owner files a lawsuit claiming they own a 10-foot strip of your commercial parking lot. The $20,000 you pay the attorney to fight the battle cannot be deducted on this year's tax return. The IRS forces you to capitalize those legal fees. The $20,000 is added directly to the property's cost basis. You cannot use this to lower your current active or passive tax bill. Instead, you have to recover it over the depreciable life of the property, which in a commercial setting is 39 years. You know, legal battles and evictions are an unavoidable cost of reigning over real estate empires. The leaders who win the battle do not panic over these areas of friction, nor do they misclassify their expenses based on their emotional frustration. We'll see you next time on Kingdom's Wealth and Wisdom.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.